Hey, Mike here. I was going to do a real quick video for you and I'm really answering an email question, but it's a common one I get, and that is, how do I go through the sectors of the market and how do I find ones that are holding up while the market is pulling back? Because typically what happens is the sectors and markets that hold up during a correction tend to perform the best afterwards. And as you know, even though the S&P 500 has been pulling back here, European markets have been going up and outperforming, and so as gold and commodities as a whole. But let me show you the individual sectors that make up the U.S. stock market, and let's see which ones are doing the best this month. And again, this is TC 2000 you're looking at. They've got a free version at freestockcharts.com, and I'll go to their industry groups or main industry, and this is their watch list. Oops, it is industry groups. There we are. Okay, and they break the market up to into 239 separate sectors. Stuff like, here's telecom services, printed circuit boards, auto parts stores, home furnishing stores. But let's find out which ones are really performing the best. And I'll click here, and I'm going to add a column. I'll click the square there, and I'm going to go to recent performance here. And here we are. This ranks them by what they've done the past week, the past month, the past 3 months, the past 6 months, or the past year. Well, we'll look at the past month. So with the click of a button, all the sectors now are ranked by performance in the past month. And at the very top is office supplies. Well, what's going on there? Let's find out. I'm going to right click my mouse, and I'm going to pop up all the stocks that make up the office supplies group. And it's only three. This one, and this one. Well, obviously probably what happened is this company got bought out or something. So, okay, nothing much going on there. And of course we got silver, which I'm not going to go through because you know the story with silver. We got medical stocks. Well, that has an interesting sort of chart pattern, which I like stuff where the 200-day Bollinger Bands are consolidating. Maybe there's some potential in here. And I don't know what we're going to see. I haven't done this first. We got one stock, laser vision. Well, that's something I have to research and look into. Manufactured housing, gold. No, silver and gold are among the top performing sectors here. Personal computers. Oh, that looks interesting. While the Nasdaq's been dropping, and everyone on CNBC is wringing their hands in the correction, this tech group is doing well. What's going on there? Apple. Now, isn't that interesting? Apple has been going up while the rest of the market's dropped after it's performed so poorly since last fall. Well, that could be a sign, if this continues, that Apple, when the market correction ends, and I don't think it's over yet, but I'm not worried about it. I don't think it's really going to fall much either. I think we can get a nice bounce short term, but I don't care really what the S&P 500 does, because I'm in Europe and I'm in gold and it's all breaking away. But I know most people that follow me and go to my website, they're still not in that position. They're obsessed with the U.S. stock market. They refuse to look at anything else. Well, if you're in that category, Apple is something that looks like it's holding up well. And it'll probably do well, the next couple months. Home healthcare, computers. Anyway, well, let's just flip it around and just see what's doing the worst, just out of curiosity. Tobacco, REITs, building materials, residential REITs, real estate. Well, that's interesting because real estate doesn't seem to be doing too hot. Foreign utilities, hospitals, I can't say it's doing bad, it's just sitting there. Regional airlines, well, the government stopped a merger the other week, so that's probably hurting them. So anyway, this is the software I use, and this is how I do it. Pretty simple. To recap real quickly, TC2000, I hit watch list, industry groups, I hit the little square, change columns, recent performance, and just like that, I can rank all the sectors. Well, let's look at ETFs, because those are just pretty much US sectors, and I've got my own personal watch list here. Here's foreign ETFs, the whole world at my fingertips, basically. And which ETFs have been doing the best the past month? I have no idea. What was that? It's Spain breaking out to new 52-week highs, while the S&P 500 is correcting, breaking out of this base and exploding in value, and it's probably going to do great going forward now. Greece is performing well, up 13% in a month from the July bottom, right? Of course, we know that the Greek banks have surged. Italy doing fantastic, breaking out too of its May highs, in a position to rally strong. Austria breaking out, on the verge of breaking out to new 52-week highs. Belgium on the verge of breaking out. France at new 52-week highs. Not quite sure what EZU is. New Zealand, I think. Netherlands breaking out. Sweden on the verge of breaking out. Germany at 52-week highs. So there you go. European markets, 52-week highs and breaking out while the S&P 500 is correcting. Europe is breaking away. Europe is where the money to be made is going forward, and commodities and gold. But most people can't invest there because they just watch CNBC and they just want to day trade. But I find it personally more easy to buy in stuff that's in the strongest markets and hold. You know, I got in last year pretty much in the fall at the beginning of a market, and you know, it makes things easy. I just hold my positions. I think, you know, they're going to keep going up for a long time. Simple. But that doesn't mean, you know, it's too late to buy or whatever. And we got gold that's just coming off of a bottom, just like Europe was. We got the commodity research bureau index, you know, breaking out. There's all kinds of stuff that's just starting new bull markets. But you got to think outside the box. You got to break away from the mentality of, I'm only going to trade the S&P 500 or the NASDAQ, and I'm scared to invest outside the United States. You got to stop thinking that way if that's the position you're in, if you want to make real money going forward. Because the easy money in the United States is done. It's been a 4-year bull market now, and after 4 years, you know, the easy money's off the table. So you got to look for new bull markets, not old ones. And that's what I got to say today.